Right into it. In the end, Tim, we actually closed in positive territory.
We did, and if we can take one lesson from the market today, I suppose it was a good demonstration of how important the big four banks are to the overall performance of the Australian market. They actually make up 27% of the ASX 200 and they're all down significantly despite good gains across many other sectors. And they took about 25 points off the market overall. If we just have a look at a market map here, you can see a lot of green in the market and then just a big blob of red where the big four banks stand there, and that really weighed on the market, but yet we did finish in positive territory. But you look across, materials up over 2%, energy did well, discretionary, media, healthcare, all did very well today, so really weighed down by those banks. Saw the Aussie dollar hit 19-month lows, so we saw some of those stocks that are leveraged towards the US and also the US dollar and Australian dollar cross rate do pretty well. The likes of Brambles, News Corp, QBE in the healthcare sector all doing well. And it was, the banks down again. I think the lower Aussie dollar again pressuring the banks, despite some pretty good moves in financials offshore overnight. The question will be now is when we're going to see some support come in for the banks. Any dips we've seen in the banks so far have been bought up probably mostly by retail investors searching for yield here, but I think retail investors might be a little bit nervous jumping into the banks at the moment, given we've been seeing a few days where the big four banks are losing over 2% in a single trading session, so it might be a little bit more difficult to try and pick what will be a good entry point now. Plenty of calls now that they're looking a bit overpriced, and of course that Goldman Sachs call to rotate out of the banks and into the materials, really helping the materials sector push higher today. Really BHP, Rio, Fortescue and all the mid-caps doing very well today. One theme in the market we've been seeing over the past year is a big underperformance within small ordinaries. Today it actually well outperformed the market, up 1.5%, thanks to its large exposure to the resources sector, which did particularly well.
Just on that Goldman's note, Tim, a case of incredibly good timing in regards to the trend we saw, the rotation, or do you think they were actually a major, I suppose, component of the move?
Look, it's a bit hard to tell, I suppose. If we look at the trend in the market recently, the trend has been selling out of banks. We haven't necessarily seen the materials do particularly well. They probably, in a relative sense, have outperformed over the past couple of weeks, while the yield plays have underperformed. But I think it's a bit difficult to tell what's the cause here. Certainly, the Aussie dollar, I think, is a factor. Lower Aussie dollar, there's plenty of people calling the fact that the lower Aussie dollar is going to benefit the materials significantly. Of course, we're seeing offshore investors sell out to lock in profits within those yield plays. But it is a big call. I mean, brokers changing their calls. You look 6 months ago, there were so many positive calls on the banks to continue buying just for the yield. But now coming out to say that trade essentially is over and it's time to move back into the materials sector. And the materials sector, I suppose, looking a little bit, I'm not shaky, but commodity prices have come off a bit. We've seen iron ore price come down. Copper's not doing particularly well at the moment, sort of just trading sideways. So I think that's a pretty big call. It's hard to tell whether it's actually the cause of that rotation we've seen in the market today or not.
The fall, if you like, in the Aussie helping to underpin growth in the resource stocks?
Look, if we hold all other things equal, then yes, a lower Aussie dollar is beneficial for the miners. Sell in US dollars, report in AUD. But I think the Aussie dollar might be indicating something in terms of where commodities are heading. I mean, if you just have a look at a 5-year chart between the Australian dollar versus the price of copper, for example, you can see very close correlation there. We know that the Aussie dollar is a commodity currency, and really, if we have a look at take BHP for example, in their half-yearly reports, they have a sensitivity analysis table where they showed that a 1 cent move lower in the Aussie dollar versus the US dollar across the fiscal year 2013 would make a $110 million difference to bottom line net profits. Now that's actually equal to a $1 move in the iron ore price. So a $1 move higher in the iron ore price has that same $110 million effect across the fiscal year 2013. Now, if we actually have a look at commodity prices this year, particularly iron ore has come off significantly while the Aussie dollar has as well. So if we look through 2013 so far, just calendar year from January, the Aussie dollar's pulled back around 10.5 cents from up around $1.06 to today about 95.5 US cents, so 10.5 cents. But if you look at the iron ore price, it's pulled back from a peak of $160 to today around $117, so that's $43 move. So you can see the impact, if this is a bit of a generalisation, but that move in the iron ore price is about 4 times more significant than we've seen in the pull-off in the Aussie dollar for a miner like BHP. Now, BHP probably, it's not as sensitive or leveraged towards a move in the Aussie dollar as some of the smaller mid-cap miners here in Australia, some of the mid-cap iron ore players, but nonetheless, BHP, Rio and Fortescue will benefit from a lower Aussie dollar. The question will be, is that a precursor to a lower commodity prices? Because I don't really see an environment where the Aussie dollar continues to fall significantly, but commodity prices rise significantly at the same time. So while, you know, the outlook is a bit questionable, as John mentioned, you know, there's been a lot of bad press around the Chinese story at the moment. I think there's still the opportunity to buy into mining stocks this year at some stage. There's a lot of bad sentiment within that sector at the moment, and there is probably a bit of an expectations of EPS to pick up through this year through 2014.
For the Aussie and the argument around it, I mean, what's your feeling on the outlook for the local currency?
Look, it's certainly seeing some strong down momentum at the moment. Just to agree with John's point there about the fact that the Aussie dollar had been staying relatively high while commodities dropped off. You can see here the correlation very close between the Aussie dollar and copper, and you can see that divergence starting to take place there over the past year or so, where commodities have drifted lower while the Aussie dollar has sort of stayed around those same levels. But I think we saw a bit of technical selling and probably some stop losses hit maybe in the Aussie dollar this morning, because right at 9 a.m. when it hit that 96 cent level, once it traded through there, it just dropped half a cent in a matter of basically moments in minutes, and really has traded lower all day today as well. And I think the Aussie dollar at the moment, you know, that downward momentum is going to be hard to break. You'll probably see some bounces higher, but it does look like it's developing a downward trend. The Aussie dollar, you know, a lot of strength in the US dollar at the moment. I think US economic data is particularly important at the moment. We're seeing US bond yields in the US push higher. They're pushing up sort of around 2.2% at the moment last night for the 10-year yield. So the US dollar index also gaining about 0.7% in trade last night, and that's adding extra pressure downwards on the Aussie dollar. But I think, you know, there's plenty of talk around the Reserve Bank, and yes, it does look like there could be further rate cuts to come, but the Aussie dollar in the near term looks, the Reserve Bank, very symptomatic to moves in the US, but also I think what's going on in China and commodity prices is probably a more significant driver of the Aussie dollar than the possibility of further rate cuts, because we have seen some significant amounts of rate cuts over the past year and a half, and for a long time the Aussie dollar didn't really go anywhere.